Hello, hello, hello. What's going on, everybody? Hello. Sorry about that. Mic was muted. Always with the mic troubles. How's everyone doing today? Welcome to Al Stock Trades. All right, Cyber Club Monday. Let's go, Mike. I know. I'm so sorry. I'm back. I promise. I hope I'm back. Am I back? All right, I think I'm back. All right. So, a couple things that we want to discuss real quick. This is going to be a very quick video, right? It's very quick. Nothing too crazy. Our beloved Peter went ahead and posted and just kind of look at that little grin, sending a couple signals here. He's doing financial checks, just all the things the CFO needs to do to make sure there's no headwinds to come in 2025. So it's good. He updated it. I'm not going to go ahead and read it for you. You could just pause the video and read it for yourself here, okay? But there's that. Okay, you and Peter with the mic. I'm telling you, right? So a couple things. Yes, this one here. So what's going on this year? Okay, so we believe there's going to be a year-end rally. However, there's going to be some choppiness, right? There's going to be some events that you want to look for. December 6th, you're going to get the jobs report for November. December 11th, you're going to get the November CPI. And December 18th, you're going to get the FOMC meeting. So until then, the markets are going to be, there's going to be some, just ups and downs, right? But I think once we get these three things, and once they point into that right direction, we're going to have a year-end Santa Claus rally, and it's going to be epic. Okay, so that's kind of just kind of quick and dirty. Someone yesterday said, "Hey Al, do you have any data to back up what you've been saying is correct?" So normally I release my annual report sometime at the end of December or January. But here's the portfolio hedging modeling system, and we published this on. You can see January 2nd, 2024. The date, you can't fudge these dates, right? And these were our stock picks, right? These are our stock picks. Hold on for a sec, guys. Sorry, guys. All right. So here's our stock picks that we went ahead and picked. So the question is, how have they performed in conjunction together relative to that of the S&P 500? So we went ahead and did that yesterday. And again, we usually like to do this at the end of the year. But as of now, imagine I put this in now. These market manipulators that are watching our channels and like, oh, we got to hurt this guy, right? I don't like to release these because these are our proprietary information, and you can kind of backtrack this. Very difficult to do, but our portfolio hedging total and average return of 35.07%. Okay, so what is the market's return this year? 27.19%. Now that's our data, and last year we outperformed the market as well. Again, this is our proprietary hedging modeling system. If you were to ultimately look at how it performs relative to that of the stock market, you can look at this graph here. The blue is us, right? The yellow is the NASDAQ, and the Russell and all this other stuff is this, right? So you could see, it outperforms. Now during a recession, you get some, all of them underperform, and then after 3 years after a recession, it just basically picks up, and then and then it just took off, right? So this is $1 million invested turned into around as high as $12 million. Okay, so that's pretty much explains kind of what we did. And we talked about this yesterday, but I just wanted to remember FIX is up 144% year to date. In fact, what is it up right now? Year to date, it's up 142%. So it fell a little bit from from today. But again, on average, because as we said, the market's going to most likely be choppy as it's heading towards the dates that I showed you here. But overall, this is our portfolio hedging modeling system. We call these out. You know, and averages around 35%. The S&P return is 27.19%. So, our product speaks for itself. So there's that. There's the data for that. Another thing, what I want to do really quickly is I wanted to talk about Max Payne real quick. So if you look at Max Payne, again, this is part of the stock terminal for folks that want access to all this data, everything we offer, our educational platform, educational arm. There's a Black Friday sale, coupon code Black Friday. Take advantage, okay? So as you can see, the Max Payne for this week on expiring December 6th is $3.50. So that's pretty good there. Another thing that I wanted to talk about real quick is if you look at the algo score, I just kind of typed this in before the live. The algo score is kind of battling. It's a little choppy, and I don't think we're going to get a clean algo score until these dates, right? Which is why I kind of led with this. I think these are, I think we're going to get a really good algo score at the end of the year, especially near the end of December. I'm not really looking for anything, special for that. And if you look at the Monte Carlo sequence projection that was hit on 10:06, we're still, going to that $4 range. And this is the first time ever in the history of Clover Health where analyst price targets were above $4. Or let me rephrase this. This is the first time in the history of Clover Health where the analyst price targets were actually higher than the stock price. It's always been the opposite. So, that's pretty good. Now, in terms of kind of what's inside our platform, we went ahead and released some stock picks. Again, these are just for educational perspectives. One thing I do want to talk about is there's a computational model. Now, normally this is reserved for hedge funds and institutional investment banks that if you, let's say, have over $200 million, you are a high profile client. So essentially you get access to all this data. I'm not sharing this information. This is like, I'm not sharing this information to the YouTube space. Lots of work has gone into this, but essentially, just to kind of explain, how this is derived real quick, is technical analysis. There's a lot of data you can get. There's a lot of derivations you can get because, think of like, you are in a neighborhood and you're on a hot air balloon, okay, and the neighborhood is divided in different sectors, right? The neighborhood is divided in different sectors. And the problem is it's hard for you to see the little tiny human beings from a hot air balloon. But let's say you put a little color symbol on the heart on the people, right? Which is essentially technical analysis, right? You're able to figure out where are they going? Are they going to the healthcare house? Are they going to the financial house? Are they going to the industry house? Essentially, what sector of the S&P are they going into? Now, if you don't recall, Tom Lee said industrials and financials were going to be good. And, obviously they ranked really high within the score. So essentially what you do is you look at the technical analysis, you do a sophisticated computational modeling system and a whole bunch of stats, and you go in and subdivide that through the sector and also per stock. You can look at the symbol too, right? And then you say, okay, well, Wall Street's putting their money in here. Let me go in here and let me look at the most undervalued stocks there in the stocks that have value or about to, let's say, go from negative to positive free cash flow or whatever. Okay. And then all of a sudden you do that, right? And then Wall Street's going to come save you pretty much. They're going to go ahead and be a tailwind, right? But let's say you can look at a contrarian effect. You could say, well, healthcare, not a lot of money is going to healthcare, right? It's ranked in the bottom. Okay, that's good. That's good. Okay, because then you can look at the stocks there, like for example, Clover Health, and find the most undervalued stocks there, right? Now, with Clover, it's a little bit tricky because it's not in the Russell 2000, nor it's in the S&P 1500 or 500, of course, right? But again, you could find that, see the most undervalued, and then eventually Wall Street will come pick you up, right? So this is very good because it basically gives you where Wall Street's taking their money from. So we went ahead and talked about one stock that was on the list, Day Stock. In the past 6 months, Day Stock is up 63%. Okay, so just cares to show you kind of the power and the type of institutional data we're getting. Okay, so I've been talking about Clover Health for a long time. And a lot of folks think that it's just, all I talk about is Clover Health. No, that's besides the case. But at least now, you see, based off of the most hated stock on Wall Street, you can see it's up 254% to a point where you look up images, you basically find us. Okay. So I hope that kind of solidifies the overall trust. I hope that you can have in us, but also it hopefully you're starting to see that what we're basically teaching from an intrinsic value perspective is actually working. So that's pretty much it there. So we talked about Monte Carlo. These are the big dates. You want to write these dates down. Let me just kind of put them, put them to you in a nice little thing here, right? These are the dates, right? December 6th, December 11, December 18, right? You want to go ahead and keep these dates down. Afterwards, we're going to go to a Santa Claus rally. And then I think Clover's going to be experiencing some of that rally as well. But yeah, for folks that have joined our platform, please integrate yourself. Some of you are slowly starting to do that. I'm very happy. There it is, right? Oh, here it is. Bought myself a laptop next. We'll be joining the platform. Looking forward to it. Yeah, and here's the thing. I'm very excited. We're building a beautiful community, and I hope that now you can see. This is what I did. Okay, I took a piece of space, which is the stock terminal, and I pretty much filled it up to the max, and I can just keep jamming stuff in there. I think we have more than 2.5 billion of institutional data. I think we have more than that. But last time I did my analysis last year, we got 2.5 billion outputs. Okay, so we've been pushing more stuff into this, and I hope that now you're starting to see. Again, just look at my life, right? If you at the end of the day, if you want to be a millionaire, you got to have the products that the big boys are using. Problem is, you can do that and not get our platform, and you can go ahead and get a Bloomberg terminal. But the problem is the Bloomberg terminal costs $25,000 per year, right? You know how many Clover shares that is? Okay, so that's the sad part. Or you can go ahead and join this platform, join our platform with Black Friday. Now, here's the thing: our platform is going to ultimately be 7,000, 8,000, 9,000, 10. Our platform is going to be lifetime access, of course, but it's going to get to that where it's going to be very expensive. The question you have to ask yourself now is, just like how the lifetime members from last year or the year before they bought, you know what I mean? You guys are they're sitting pretty sexy, and you guys are going to sit pretty sexy too as well, as the future unfolds. So again, at the end of the day, if you want to break out of this hamster wheel, you want to learn how these big boys make money on Wall Street, and you can enjoy this beautiful life. Oops, sorry. You want to enjoy this beautiful life, and be able to have the best of the best. It sucks that that's even a choice. I wish everyone gets that. But in the world we live in, you need money, right? This is how the big boys are doing it, and we are teaching it. And we have many millionaires on our platform. And on average, total assets for Clover right now, if you combine everybody, we did a survey from people that have invested on their own behalf. Everyone together, we did a survey. We try to figure out how much Clover we have. We have on average for a 30% response rate, $55.3 million. So our platform's not going anywhere, right? We're going to be here for a long time, my lifetime, and hopefully we can extend it beyond that too. But hey, at the end of the day, you want to ride with us? It's going to be, we're going to have a really, really wonderful life. So, good morning, B-Rob. How is everything? There it is, guys. Let's see. Let's apply noise cancellation technique and revisit Q1 2025. Oh yeah, I know. For the mic. Oh, I know it's terrible. It's terrible. Oscar's recovering. Yeah, they got that Kushner effect, right? All right, ladies and gentlemen, God bless you all, and I will see you on the next one.